I hate to say it, but the possibility of a cryptocurrency catastrophe does exist. Now look, this is evident in non-stable stablecoins, and long before TerraUSD's demise, other stablecoins actually were failing to provide crypto traders with the steadiness of the dollar. The recent collapse of TerraUSD, the once third largest stablecoin in the world, has sparked concerns about the capacity of other fiat-pegged tokens to sustain their pegs. So let's take a look. So stablecoin companies effectively assert that each of their issued tokens is supported by a real-world digital asset. And because of this, stablecoins function as an essential component of the cryptocurrency market because they give traders an alternative place to, say, park their funds between placing bets on very volatile cryptocurrencies. Stablecoins such as Tether, USDT and Circle USD are great examples here. According to their proponents, they are backed 100% by cash or cash equivalents, such as bank deposits, treasury notes, commercial paper, and so on. But look, on the other side of the spectrum, we've got stablecoins that are not so stable, based on computational processes. They're not necessarily backed by actual assets, but rather they depend on financial engineering in order to maintain their peg with fiat money, which is more often than not the dollar. And this very fact has resulted in widespread mistrust and has unfortunately caused the movement of funds out of stablecoin currencies. For example, the market value of USDT dropped from 83.22 billion on May the 9th, and this is the day which UST began losing its peg to the US dollar, to 72.49 billion on June the 2nd. And this is the most recent day for which data is available. That's quite a big drop for something so stable. And as a result, the value of USDT deviated from its parity with the dollar while experiencing outflows, albeit for a limited period of time. And sadly, that is not the case with algorithmic stablecoins. Some of these are still trading vastly below the fiat pegs that they were designed to correspond to. So let's take a look at some of these stable stablecoins. USDX, the Kava network's native decentralized stablecoin, was known for trading around, well, 0.02 to 0.04 cents below the dollar most of the time. And this is pretty stable. However, as you can imagine, the TerraUSD catastrophe pushed it further away from its near-perfect peg with the greenback. In particular, the USDX fell to its lowest level in history on May the 12th, $0.66. And since then, the USDX-USD pair has been striving to restore its dollar peg and was trading at roughly 89 cents on June the 2nd. Simultaneously, USDX has had $60 million in withdrawals since May the 9th, indicating that dealers are redeeming their tokens, so to speak. Now, the development team behind Kava Network, known as Kava Labs, highlighted that USDX lost its currency peg as a result of exposure to UST as one of its collaterals. Meanwhile, a drop in USDX's other reserve assets such as Kava, Cosmos, Atom, and Wrapped Bitcoin, or WBTC, this all disturbed the currency's stability. Now, Scott Stewart, the co-founder and CEO of Kava Labs, stated in May that USDX will keep its dollar peg after removing UST from its ecosystem, but we'll see. Vi has become yet another casualty of the recent stablecoin market crash. Yesterday, the algorithmic stablecoin sold for 95 cents on the Binance Smart Chain-based Venus protocol. This is a lending platform. However, the coin, much like USDX, has a history of trading below its intended dollar peg. For example, in September of 2021, long before TerraUSD's demise, Vi had fallen as low as 74 cents. Furthermore, the depeg scenario happened following Venus Protocol's $77 million loss on bad debts in May of 2021, and this was as a result of massive liquidations on its lending platform. In May of 2021, Vi's market valuation was $272.84 million. However, with the Venus financial crisis and the collapse of TerraUSD, Vi's net worth fell to about $85 million, and this indicated a significant reduction in overall demand. Now, DAI, an algorithmic stablecoin native to Maker, a peer-to-peer contract lending platform, performed extraordinarily well in comparison to its competitors, never deviating too far from its stated dollar peg despite a 20% fall in market value since May the 9th. Other algorithmic stablecoin initiatives such as Frax and May similarly kept their dollar peg throughout TerraUSD's fall, which is also important to note here. So not all bad news, right? But look, the fact that these coins haven't yet stabilized does little to extinguish my concerns. Simply said, the possibility of a cryptocurrency catastrophe does exist. Now, in one of our previous videos, we actually talked about how governmental organizations are intervening with stablecoins and maybe adopting a different approach. And while much has been said about potential regulation in the UK and the US, nothing meaningful has actually been done thus far. And look, if they do not act soon, it will be difficult to advocate for the usage of stablecoins, since they will continue to expose customers to volatility and risks that they should otherwise be advised to avoid. It appears to me that the time for allowing the industry to develop has passed. Regulation is required to safeguard consumers and ban excessively dangerous behaviors if the promise of stablecoins is to be realized in the end. This capability, I think, has the potential to transform the global economy by accelerating transactions, cutting prices, and also boosting transparency. Allowing the industry to develop, however, should not come at the cost of people's savings. If these withdrawals continue, it will put a test to both the stability of a specific stablecoin and, more broadly, whether the entire industry even has a future. One failing stablecoin is terrible news. However, two or more, well, that could mark the end of an era. Anyway, we'll continue to keep an eye on events and let you know where it goes. My name is Bradley, and if you've enjoyed our roundup today, don't forget to leave a like on the video and subscribe so that you're always up to date in everything crypto. And I will see you on Monday.